Hi, everyone, and welcome back. Chris McNally here again, Evercore ISI, head of global auto and mobility. And thank you for being with us for the day. It's really our pleasure in this final fireside chat of our EV track to welcome Henrik Fisker, Chairman and Chief Executive Officer of Fisker, joined by Dan Gowles, VP and Investor Relations. Henrik, Dan, thanks so much for joining us today.
Thanks, Chris.
Henrik, I think we have such a broad investor group with us today. What I've been asking of all the presenters is maybe you could just give a brief 101 of what Fisker is, essentially its second life, and really how this new company came to be, and really what you're trying to achieve over the next couple of years.
Absolutely, thanks, Chris. So we set out, the goal of creating the world's most sustainable vehicle, and I think this is something that's going to be more and more significant for the consumer, specifically if you can choose a sustainable vehicle which offers everything you want for the same price point. In the past, there's always been about a sacrifice, but we're looking at this in a different way. So that's number one. Number two, we also looked at disrupting the automotive industry in a way that hasn't really been done yet, specifically across three of the main areas where there traditionally is going in a lot of investment, there's a lot of risk and very low profit margins. But as we move into technology that's get drastic improved every year, every 2 years, that doesn't work. And now that you have somebody like Fisker coming in, where we can develop a car in 2.5 years, we can choose technology as late as 18 months before we launch the vehicle, which is one of the reasons we'll come out with the Fisker Ocean next year with one of the longest ranges in its class, with new ADAS technology, with a 4D digital imaging radar, with a screen which has the highest resolution, with a unique feature we just patented that nobody else will have. And that's the type of stuff that we are able to do at Fisker because of this fast development cycle. Now, the second part is manufacturing. We know how difficult, or at least a lot of people know how difficult it is to manufacture a car. So we went in a different route, more so of the Apple Foxconn model, where we engaged with two contract suppliers. The first one is Magna International, which is known for high quality vehicles. They make currently Toyota Supra, BMW 5 Series, Mercedes G-Wagon, etc. So they'll be manufacturing for us our first vehicle, the Fisker Ocean, which, by the way, starts at $37,500 up to $69,000. It's a unique SUV, which really don't have a lot of competition in the market. It looks completely different than a Tesla Model Y. It looks like a real SUV. So that takes the risk out of how is Fisker going to make a quality car. And then secondly, we believe in partnerships with global tech giants. So we made a very significant binding contract with Foxconn, where we are going to create a disruptive vehicle together, the first premium electric vehicle to be priced under $30,000 with a good profit margin. And as electric vehicles become more computers on wheels, the fact is that we're going beyond the traditional automotive supply chain. We need more technology, more tech components. And of course, Foxconn is the biggest tech manufacturer in the world. So with Foxconn, we are seeing prices for tech components be a lot lower than traditional automotive components coming from automotive suppliers. So that's the advantage we have with Foxconn, that we are probably going to create the first vehicle which are sourced with a technology product in mind rather than a car. And that's really where we're going to see a big difference. So that's a little bit about what we're doing at Fisker. We also have a unique lease model, which we can talk about. And of course, we are public on New York Stock Exchange on the FSR, and we raised over $1 billion. We have about 900 million in the bank right now. So that's sort of high level where we are.
That's a great overview, and maybe we can dive in then, to how things are different at Fisker versus some of the more traditional OEMs, or even the new EV startups. And the first is the capital light business model. Could you talk about that decision? We've heard from others that they think manufacturing is a competitive advantage. Obviously, you are getting a bunch of advantages from Magna or Foxconn. You just mentioned some of them, but so we could just go through the idea of a capital light business model for an OEM and a startup.
Well, first of all, manufacturing is only a competitive advantage if it's done in a lean way and if you get a quality product. And I think, Apple have shown that they're able to do that with all their products, but they don't manufacture them. Secondly, we have to put in perspective, manufacturing of a product is very different than manufacturing a car. Manufacturing a car is extremely complex. You need a global supply chain, you need an infrastructure, logistics, and you need skilled labor. So this is something that the traditional industry have perfected over the last 50 years. So to come in as a startup thinking you can beat Toyota out of the gate, I think is very naive. And we saw how long it took for Tesla. Even Elon called it manufacturing hell. So those are two very important factors. How fast can you as a startup learn to manufacture a car? And do you want to burn your money learning how to manufacture a car? We know it takes billions of dollars to make a plant. And if you first have to raise billions of dollars and spend several years learning how to manufacture a car, I'm not sure that's the best way of spending investors' money. Now, granted, eventually, when you've learned it, you're going to be able to take Yeah, so what you've seen with a lot of, or pretty much all the startups in the EV space, they start out with a luxury car, which is cool, and it can really show off. We're able to put it in to a more affordable vehicle. Even the Ocean will have it, which is also affordable. So it allows us to get more expensive technology into less expensive vehicles. And I think that's going to give us a market advantage. When people get into a Fisker, they'll go, wow, I can't even get this in any other car in this price class. So that's suddenly going to be a value proposition that's going to be unique to us. And I think that is a big competitive advantage.
So maybe let's talk about some of those the features, because obviously an introductory price of 38,000, that is before or after the just so because we have some newcomers on is that before or after potential regulatory credits?
No, that's before. So with the credits, it can get under $30,000, and the same with the Pair. It's before, so we can get close to maybe $22,000 for that vehicle. So now you're in a true mass market segment. The average vehicle price in the U.S. is close to $40,000. So we are well below that with our first two vehicles. And I think that there's a couple of key things here. One is that we're able to source components for higher volume through our partners, Magna and Foxconn. The second part, of course, is we're asset light, so we don't have to maintain endless amount of buildings, factories, and employees waiting around to do service, etc. We have a very unique service model where we signed up here with Cox Automotive in the US. We signed up with a group in Scandinavia. We've signed up in England. So the advantage here is that we immediately get access to a gigantic service network where we don't have to pay for people sitting around noodling their thumbs waiting for us. We pay as we go. And that infrastructure is important once you start scaling up, because that's been one of the issues with some of the startups. They didn't have enough service centers available and customers got angry. So we won't have that problem. Plus, we don't have the expense. Secondly, by not having dealers, of course, we delete the dealer margin. We are selling our vehicles online on our website. We are doing it on our app, proprietary app. And we have now got it down to 3 clicks to reserve a vehicle. We also have a unique delivery model where we deliver the vehicle at home. We'll pick up your car for service. We have a lease program, our own lease program, which is a flexible lease where you can give back the car anytime. And we will keep owning this car until end of life when we recycle it. And I think that's probably a business model most people haven't understood yet. But the exciting part of this business model is that after 10 years, we'll have millions of vehicles that are running around that makes money for us that we have already paid off, because these vehicles are paid off after 4 or 5 years. So when you then have these vehicles, which are going to appear newer because we take care of them, we're going to be able to upgrade them with the latest software. And that's a whole new business model, to be able to have 8 or 10 people in your vehicle over a 15-year period and making all the money. Today, that money is made by used car dealers and not by the OEMs. It's a one-time sale. So that's a different business model. model. And then, of course, we have our largest battery pack. We'll have 2 battery pack sizes, one for the base vehicle and one for the 2 other top vehicles. And the top vehicles will achieve a range that is class leading beyond anybody else. And I think that's something nobody has achieved yet to pass Tesla, quite frankly. There's no traditional OEM. They have spent billions of dollars and they're not able to do it. And I think one of the reasons is that by the time they come out with their cars, Tesla's already upgraded the vehicles and their technology is now old, their battery technology. So that's something we are avoiding by being able to choose our battery technology this year with the latest cells. We have a new super dense battery pack design. We have, of course, a battery cell supplier, which is one of the biggest in the world. We're discussing when we would localize, battery pack and potentially understand when cell manufacturing would be localized to take cost even further out. So those are all things are in the plans. But I think the key, again, is can you come out with the latest technology before anybody else and therefore take a leadership? And it doesn't necessarily matter if it's your technology or somebody else's that you buy from a supplier. What you can afford is buying a technology from a supplier and then be last in the game, because now you have old technology, whether it's yours or not.
And then, Henrik, on that price point, specifically with regards to regs, and obviously we don't know how the Biden infrastructure bill and EV credits will work, but I thought it was very interesting. I think, Fisker and yourself recently endorsed this proposal that you didn't think that EVs above 55,000 should receive the credits or receive less credits, which was a bold way of saying you wanted units, right? If we want to make climate change real. And obviously you're going to sell vehicles above 55,000. Curious how you came to that number, just a little bit about your policy view, because it's quite striking. And it's definitely different from what we see from other OEMs.
Yeah, so, 80% of all vehicles in the US that are sold, 80% cost less than $55,000. So in my opinion, I don't think somebody who's buying a $70,000 or $100,000 vehicle really needs, an incentive of, $7,000 or $10,000. It would be great to have it that we all like, and we all like to get tax breaks and all that. But do we really need it? Would we buy a vehicle anyway that was electric? Of course we would. But the point is, somebody who's buying a $30,000 or $40,000 vehicle, if they can't get it at the right price, they'll just not buy it. So therefore, if we truly want that change and be technology leaders in the US, we need to think about how do we get electrification to mass market. Now, what we saw is that in Europe, they have already taken these steps. They have already capped pricing in relation to incentives. Now, the advantage for Fisker, maybe by default, is that our 2 first cars also in Europe fits exactly in these price segments. So therefore, we take full advantage of the incentives in Europe, which is why I actually expect that we need to think about changing our forecast for Europe sales. I actually think we'll sell more vehicles in Europe than we initially thought. And I think it's going to be due to the incentives. Our cars are going to be really well priced in Europe. The Ocean will start at under 32,000 euro. And you can't get much of any cars, interesting cars for that price in Europe. And we have already seen, we got 3 large fleet orders from Europe already, from a big bank, from 2 big ride-hailing companies. So I think we will see an adjustment there. For the US, we are just promoting kind of that same theory that if you want the mass market to come in and buy electric vehicles, that's where you should put the money. I mean, let's not forget, eventually there will only be such a big pot of money. And I think we should shift that pot towards the center and the lower end versus distributing the high end, because once you run out, I mean, it happened already to Tesla. They ran out of their 200,000 vehicles credit, only selling expensive vehicles. And by the time they were ready with a Model 3, they ran out of credits. So now the people who theoretically should have had that couldn't get it. So I think it makes a lot of sense to go that direction. And that's what we're trying to promote. Of course, if you're building a $100,000 car, you don't like that idea. And I get that. But, we're building affordable vehicles, so we're going to promote it.
That's great. And then one last one for me. There's a lot of questions coming in, so I definitely want to make sure I end on asking a couple of questions from the audience. But run the business model. You're an EV pure play. That means carbon credits are and EV credits are a potential. How do we think about that? If we think about when you're in mass production, 2024, 2025, do you still see a pretty active and profitable carbon trading market? Because the regulations in Europe are only going up, and US we could start to get pretty significant regulations soon. So how do I think about that with respect to your business model, and just maybe throw out a couple of numbers for our viewers who are unfamiliar?
Yeah, I think we're still going to see it for the next 7 years because, the life cycle of many vehicles for the traditional OEMs are 7 years. And, there's OEMs who today are launching gas guzzling vehicles, pickup trucks or whatever it might be, big SUVs that are gasoline vehicles. So they're going to stay in production for probably another 7 years. So they're going to need some credits as they get tougher and tougher. So I definitely see that. We have, in fact, already been in talks with a few large OEM about pre-selling some of our credits. We have not factored these credits into our business plan. I mean, it's pure profit and it's a pure upside, but we haven't factored them in. But I do see the potential for it, absolutely. And of course, ours would be available because we don't need them. We are, only make zero emission vehicles. So that could definitely be an upside.
Yeah, and Henrik, is it fair to say, because there's always a lot of discussion around this, that even if it comes down from sort of the high level, a couple of $1,000 per car now, there is going to be these decisions, and we saw VW bought credits last year of, do I push out that last EV at an unprofitable margin, or do I just buy for that last little bit? So is that something why this credit market could last much longer than most people realize?
Well, the reason it could last is also because if you understand the credits, how they work, you cannot get a credit just by producing an electric vehicle. You have to sell it, and it has to be in the customer's hands. So what we have seen with some of the large OEMs, the traditional OEMs, they made some electric vehicles that they wanted to get credit for, but they couldn't sell it. But we started to take reservations because we had a request by a lot of people. Now, what we thought was we don't really want to have these reservations which may not seem real. So we went away from the idea that a lot of the startups adopted, which were sort of $100 fully refundable. I kind of felt any teenager that wanted to show off at a party could make a reservation and then 3 days later cancel it. So therefore, we said $250 is the price of a reservation, and we keep 10% as an administration fee. So if you cancel, you don't get your full $250 back. And we make that very clear on our webpage and on our app. So I think the reservations we have are pretty serious. I think at this point we have well over 16,000. I didn't check the latest number, but it's definitely well over 16,000, which I'm really happy with. The goal is minimum 25,000 by the end of the year and minimum 50,000 by end of next year. We also have a specific unit within Fisker that concentrate on fleet sales, specifically in Europe. We have people in Europe that are going after the top 100 ESG-focused large companies in Europe. Some of them buy as many as 20,000 vehicles per year for their employees. It's part of incentives in Europe, and tax rules works a bit different in Europe. So we have already seen success with that. We're in negotiation with quite a few. We already have 3 orders, and the way we do those orders is by doing diligence, by creating a mutual MOU, so we make it serious enough. And we have 1 fleet order from a large bank in Europe, Credit Agricole. I think it's 300 or 400 vehicles. We then got a ride-hailing company in Scandinavia, 300 vehicles. Example, they wanted to order 1,000. We say, why don't we start with 300? We have a leasing company in the UK that are ordered, I think, 300 or 400 vehicles. So I see a lot of potential with these fleet orders in Europe because we're in the right market segment. You know, you have to be in a certain price range. You have to have a certain type of vehicle. So if you have a 2-door sports car, a pickup is probably not going to fit. But with our vehicle, we're just perfectly placed with our vehicles. So I expect a lot of fleet orders out of Europe.
That's great. And then in terms of the pace of reservations, obviously going to see a large increase post the reveal. Could you talk a little bit about this in November, when the date will be set, what type of event it will be, things like that? Because it seems like obviously a very big upcoming catalyst.
Yes, we haven't had a single day without getting, reservations, and we continue to getting reservations every day. What we're doing is we are in the middle of finalizing our complete marketing plan and rollout, and that will include a lot of different things: influencers, digital marketing agency that's global. We are doing product placement in television series, which we've already done. So we are doing a lot of unique things. Of course, we're going to attend a lot of auto shows like Geneva Auto Show next year. We'll go to some other type of shows, probably consumer electronics shows, some tech shows. And then, of course, Los Angeles Auto Show in November is where we actually unveil our Ocean, and we're going to unveil a lot of surprises with this car. We're going to, of course, show the final pricing, the final performance figures, etc. And the reason we're waiting until November is because we also don't want to give some of these things away to the competition too early. And we think it's a good time to launch in November. Then it's exactly a year away from first deliveries. And that's the right time, I think, to start marketing.
Great. And then, Henrik, I'll leave on the last concept of future things for Fisker. There was a bunch of questions around adjacent markets. Can we take this to the pickup market? Can we take this to the commercial van market? Obviously, you have special qualities, design. You're not going to look for it to be the everything company, but maybe how you prioritize some of the next projects, thinking more 3-4 years out.
I think we're going to prioritize the hardcore commercial market the least, because in the end of the day, we are a design company and we are about emotions. We are about sustainability. And when you look into the commercial market, number one driver there is cost of ownership and cost generally. And I would hate to come out with a full-size electric pickup truck right now where, Ford just announced their F-150 electric pickup truck. I think if we make an electric pickup truck, it would be super cool, emotional, and different, and nothing like an F-150. I think it would appeal to people who are more lifestyle-oriented and want to have something fun and cool. And if somebody wants to use it for work, that's great. But I probably wouldn't go in head-to-head with F-150. In terms of other segment, we're exploring all segments. In fact, my number one goal is to see if we can crash segments, if we can do segment busting vehicles, so the Peer will not fit in any segment. We think we can take people out of everything from a Toyota RAV4 to a BMW 3 Series in negotiation with some partners around that vehicle, which also would be in a segment that currently doesn't exist. So that's how we see ourselves going out in the market, really upsetting the tradition and grabbing some serious market share.
Well, 4 vehicles, four disruptive segments. So it looks like it'll be a busy 4 to 5 years. Well, I think that's almost all the time that we have. Henrik, thank you so much. Dan, thank you so much for organizing. For those on the line, you want to learn more about Fisker, feel free to get in touch with us. We'll put you in touch with the company. And thanks to Henrik and Dan, but to all our presenters over the course of the day on this EV track. Henrik, thanks again, and we'll look forward to seeing you soon.
Thanks, Chris, and stay healthy, everybody. Thank you. Take care.